Hey, my Reddit friends, how are you? Russ Whitney here from russwhitney.com. Visit the site. There's all kinds of great free information. If you like what you hear here, go. It's free, and you'll learn a lot. So I want to share a wisdom card with you. It says, be impeccable with your word. Replace fear with love. I like these. I look at them every day. The human mind is like a fertile ground where seeds are continually being planted. When you're impeccable with your word, your mind is no longer fertile ground for the words that come from fear. Wow. Your mind is only fertile from words that come from love and faith. That's amazing. You know what? Fear, there's that acronym. What do they call it? I don't know. Fear is really just an emotion. It's not necessarily a reality. But anyway, let's get to your question. This is coming from Dean at 78. Investing in real estate through a capital investment group. Any thoughts? I'm very new to real estate. I only started looking into it seriously a month ago. Buying a single family, making a rental income, waiting for appreciation value seems scary and more work than I want. Well, that strategy you should be scared of. I also looked into REITs, might invest in them. Okay, well, depends on the REIT. I recently found there are investment groups who pool money from investors by large multifamily homes. I'm sure you mean large multifamily apartment buildings. And distribute the earnings to investors. Seems to be 100% passive, and the returns seem to be good, not too good to be true. Okay. It depends on what type of return and what their track record is. I believe that large family multi-housing is better ROI than single family homes. No question about it. But I can't afford to buy such properties. Well, maybe you can, maybe you just need different information upon which to form a new belief. 66% of the American public owns a single family home. That's a lot. This country was founded on home ownership. Grants of land were given in order to grow this country. There's still all types of government grants from HUD. Dozens of them for all types of home ownership, multi-unit residential property. Let me give you an example, my friend. I just several years ago with my group, we built a 247-bed adult living care facility in St. Petersburg, Florida. If you go to russwhitney.com, go to the projects link, and you can go down and see where that started from the ground up and what it looks like today. And it was a $30 million project we did. And we got a $26 million non-recourse, no personal guarantee HUD loan. HUD is giving all types of grants for senior housing right now because the largest percentage of our population is baby boomers. Baby boomers are needing nursing homes and assisted care. It's a very good place to be, but it's also a little tricky business. You've got to really do some research on it. It's different than just a real estate investment. So let me go back to your multi-unit question. Sure, you can afford it. Multi-units, let's talk about a duplex on up to 6 units. What you want to do is this. There's only 3 types of properties you can buy. I don't care if it's a single family, a commercial building, a trailer, or a multi-unit residential. It's either in a low-income area, a middle-income area, or an upper-income area. Forget location, location, location. That's for people who got money. When we start, we want cash flow, cash flow, cash flow. So you're going to look in a working-class neighborhood for the worst property in that neighborhood. Now, not foundation work. We're not banging out walls like this goofy HGTV who's got millions of people bamboozled into thinking that's the way you make money. That's the last way. Unless you've got contracting experience, and I've never met anybody who's made millions of dollars flipping houses. I can tell you that. So you want to buy duplex, triplex, 4-unit building, cosmetically distressed, where you can buy it 20 or 30% below value because there's a logical reason to buy it that low, because it needs work and improvement, and the bank's not going to finance it, so the seller has to hold the financing. To figure out whether you make money, I wouldn't offer any more than a 10% down payment on a $75,000 or $100,000 deal, only 10%. The bottom line is you're looking for properties in rundown, beat up shape. You're not waiting you should be scared to wait for the market to go up because we have economic cycles. You want to force the value and be in control of the value. The way you be in control of the value is by doing cosmetic improvements, which is forced appreciation. We buy a rundown property in its present state, we jazz it, clean it, paint it, and we force that value up. And then you simply calculate rents, deduct expenses. It's going to tell you whether you have positive cash flow. All kinds of more information if you really want to learn about it, and you got to take some time to learn about it. Go to russwhitney.com, and there you'll have it.